Welcome back to Alpha Recap, your end-of-day market wrap from stockalpha.ai. Today, we're breaking down a clear rotation in the tape and what it means for AI infrastructure and regional demand. As always, if you have questions, you can reach us at stockalpha.ai.
Thanks for having me. Excited to dig in. A lot happened after the close.
All right, quick headline to set the table. Markets closed with a rotation toward AI hardware and optical infrastructure. Jim Cramer's line, buy hardware, sell software, really captured the session narrative. So, what really stands out here is how price action backed that soundbite.
Yeah, absolutely. You could see it in the leaders. Marvell and Intel each popped nearly 5% during the session, and Corning gained roughly 3%. That's capital moving to the physical layers that support AI workloads.
At the same time, some big software names stayed deeply negative year to date. Salesforce down about 36%, Adobe down about 34%, and CrowdStrike down about 16%. Not a great day for software incumbents.
Right, that split, hardware up, software lagging, is the meat of the story. It's a bifurcation between the application layer and the plumbing that makes scalable AI possible.
Let's talk Nvidia. It was on a 7-session winning streak through Thursday, but then it slipped about 0.5% in pre-market trade to roughly $183 on Friday. That felt like a reminder that momentum can be fragile around macro prints.
Totally. 7 days of gains, concentrates, flows, and attention. A small pullback, especially ahead of a big inflation print, is exactly the kind of thing traders watch closely. Momentum meet macro.
Mm-hmm.
And to add to that, the market was digesting a report about Tesla retail in China, showing a decline in the first quarter. That note came from Electrek and circulated widely, but it wasn't backed by official company figures. It introduced regional demand uncertainty for a big EV exposure point.
Wait, really? That could be a big deal if it's confirmed.
Yeah, but we have to be careful. Anecdotal retail data can reflect promotions, fleet activity, seasonality, or other noise. Until deliveries or registration stats show the same trend, the market is modeling a range of outcomes.
Let's pause and unpack why hardware and optical names rallied. Why now?
Simple explanation. As AI models scale, they need more bandwidth and lower latency. Moving huge data sets between servers and data centers gets expensive. Optical interconnects and silicon photonics reduce that cost and become more attractive as CapEx ramps. So companies that make transceivers, optical modules, and specialized networking silicon are suddenly more relevant.
So the market is basically saying, front-load spending on the plumbing before you scale applications. I mean, when you step back and look at this, the leaders like Lumentum, Coherent, Applied Optoelectronics, and Viavi got fresh attention for that exact reason.
Exactly. It's not just chips, it's the whole optical and silicon photonics complex getting reevaluated for AI-driven data center CapEx.
Quick reaction. Wow.
Yeah, that tracks.
Another thread from today, governance and disclosure. There were a batch of 8K filings. A handful of small and mid-cap companies filed items like Regulation FD disclosures, fiscal year changes, officer moves, and exhibits. That dominated administrative channels.
Right, most of those were procedural, but those filings can matter. Fiscal year changes or charter amendments change reporting cadence and oversight, and that can have valuation implications, especially for smaller names, where a single governance change can shift sentiment.
Let me throw out two quick questions. For traders, what mattered most today? And for longer-term investors, does this rotation look structural?
Short-term traders were focused on order flow and headline risk. Nvidia's run was a tradable momentum story, but it was sensitive to the macro calendar. Traders had an eye on the inflation print. Optical and hardware names offered higher beta and could move quickly in either direction.
And the long-term view?
Long-term investors are asking if this is a structural shift tied to model scale, and permanent architecture change. Some analysts think the rotation will persist into a multi-quarter re-rating if we see capex cycles and design wins. Others caution it could be cyclical. Software remains depressed for structural reasons, and application spending could lag. So it's a debate. Sustainability isn't settled.
Right.
Also, for income and defensive investors, the governance filings are a reminder to watch cash flow resilience and dividend policy. Small cap governance events can create outsized moves.
Short reactions? Yeah, absolutely.
Honestly, I was a bit surprised by how neatly the day's action matched the narrative. Commentary and price action aligned. That doesn't always happen.
It's almost too neat sometimes.
Right. And the other thing is the Tesla China note. One camp treats it as an early warning on regional softness. The other says don't overinterpret third-party anecdotes without registration or delivery numbers. It's a textbook example of why corroboration matters.
So, practical next steps for listeners. What should they monitor in the coming days?
Monitor the macro calendar closely. Inflation prints and any Fed commentary can reprice momentum names fast. Second, look for capital expenditure announcements or multi-quarter order backlogs from optical and silicon photonic suppliers. That will help distinguish cyclical trades from structural re-ratings.
And for regional demand stories like the Tesla note,
Triangulate. Wait for official delivery numbers, local registration statistics, and supplier commentary before drawing big conclusions. Treat those early reports as signals to investigate, not as finalized facts.
final read. What analysts were saying by the close?
Analysts noted an active reallocation toward infrastructure that underpins scaled AI workloads, evidenced by the single session strength in Marvell and Intel, and renewed interest in optical names. But momentum indicators, like Nvidia's 7-day streak, were juxtaposed against a macro calendar that could reprice enthusiasm quickly. And regional anecdotes add uncertainty that needs corroboration.
Okay, let's wrap with clear takeaways for our audience.
1. The market rotated toward AI hardware and optical names today. That was measurable and real. 2. Momentum is powerful but vulnerable. Watch macro catalysts like inflation. 3. Treat regional anecdotes carefully and seek corroborating data before assuming a durable trend. 4. Governance and 8K filings matter more than people assume, especially for smaller companies.
Quick short reaction, big move.
Short reaction, not what anyone expected.
Before we sign off, an important note. This episode is for informational purposes only. We're not giving personalized investment advice, and we're not recommending buying or selling any specific securities. Analysts note trends and differing views. Always do your own due diligence or consult a licensed advisor.
Good reminder. And hey, if you want more detail on any company or topic we covered, reach out.
If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening to Alpha Recap. We'll see you next market session.